Mm-hmm. Mm-hmm.
Ooh, welcome
Let's go.
back, traders. How are we doing today?
I'll
We
wake
are
up.
absolutely blessed to be alive, guys. Ladies and gentlemen, we are going to be going over ticker symbol GME as well as AMC with a little technical update on where we lie today on the charts. Now, let's jump into the daily on GME because you are so freaking close to getting this daily golden cross, guys. In fact, I think it is happening. Look at how close you are to the Picasso kiss. And look at where you've bounced today, right off of our horizontal trend line, and you closed right above the 9-day EMA, currently trading at 24.26. Now, this beautiful cup-like structure is what I believe will take you to this $28 price target that we have on GameStop. Now, why do I think that, right? I think that for a couple of reasons. You just now got your daily MACD cross. Now, that is a bullish sign. You are just now getting your golden cross on the daily, which is, in case you guys are new here, we talk about it all the freaking time. So make sure to slap the subscribe button and join the crew because we are here every day trying to drum up some excitement for 2,000 subscribers. But the 200-day EMA is what's trading in purple here, and that's your long-term trend, right? The 50-day EMA is what's trading here in the yellow. That's your medium-term trend. Your 9 is the red. Whenever the 50 crosses above the 200, that is your peak bullish signal that this thing is long-term, a bullish stock, right? And a good purchase. And that is what, combined with everything else, is what you're seeing on GameStop happen right now. So it's not a dead cat. It's a freaking beautiful, beautiful zombie stock. And I love it. I love it. I love it. I love it. So a couple things to analyze here, right? You could call this a broader cup and handle. You could call this a double bottom. Whatever you want to call it, the price tag remains the same. And I will go over that in just 1 second. The price tag, which you get from taking the neckline and taking the bounce off of it and the confirmation break above, right? You would just take that meaty price target of the W and complete that, right? And that takes you literally exactly into your gap fill, currently sitting at 28.42, and that's exactly where I think you're going to go. Now, why do I think that? You have earnings coming up in about 2 weeks now, and if you look here, right, look at the earnings. Look at what happens going into earnings, guys. Not only do we have the technical landslide that is occurring right now to the upside, but you have your earnings coming up, right? Look at this earnings pump. And we're going to just go through these, right? This is earnings. This is your 2 weeks going into earnings, 20%. This is earnings. Look at what you did going into earnings, right? This ran a little past earnings, but 22% as well. This is a great example of the earnings pump and dump, ladies and gentlemen. The classic GME special. This is earnings 22 days before, 40%, right? And then you freaking landslide. So I would not be surprised to see this gap fill, maybe even your $30 gap on GME. And if you got good news, if Roy and Kitty came back, some kind of acquisition, then you unlock the doors above 28 to potentially test this trend line that has been stubborn to the upside, but was a critical trend line that you tapped once, twice, 3 times, 4 times, 5 times, potentially your 6th time up here, upwards of $43 on GameStop right now. So that would be a huge, huge move from current levels. And I am bullish on the stock. I remain bullish on the stock. So weekly, not much happening right now, but the monthly, we talked about a critical level and something that could happen soon. If you see this upwards trajectory, is the monthly MACD down here may cross green, guys. Apes and apettes may cross green for the first time since June or May of 2024. Now, this has only happened twice, both times resulting in a monster squeeze, once in 2020 and once in 2024. And the similarities are pretty alarming, to be honest with you. Now looking at the quarterly, not much, but I wanted to dive into TradingView because TradingView has an absolutely beautiful analysis on the RSI and the monthly RSI. And I promised I would talk about this. Oof, cheesecake's getting to me. I promised I would talk about this in my last video, but look at the consolidation that has occurred within the previous 427 days, right? And just to give you perspective, that's been from really this high to now, which lies right under 2 years, right? That is insane. That is insane consolidation at this $25 to $20 level. And to see that you have squeezed this much, right? And you've consolidated on the monthly RSI to this amount. And you are now finding a break above that resistance level and a break above your monthly RSI band, guys. Get it through your head. I think something monstrous is building on GameStop, and I really believe that you could see some kind of pop relatively soon because of this price action, guys. There's only a few finite amount of times that you have crossed the monthly MACD as well as this monthly RSI band, and it was here in April of 2024 when you found your bottom. It was right now. You had a fake out in September, and then it was here back in March of 2020 before you found your squeeze, guys, before you found the reason we're all here, right? This is what got me into the stock market, and man, does it look good. You see, you are respecting your all-time trend line currently on GameStop, seeing rejection, 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 support, support, and now, finally again, seeing a nice size launch off of that support, so hopefully that remains true, and you have still that stubborn resistance to the upside at around $40 and this new trend line at around $45. So break that and you get into a little bit more interesting territory in terms of a squeeze, which we are targeting $72 as a gap fill again that we established back from the first squeeze, and that is that little blip right freaking there. Bam. 72 schmeckles. So that's what we're watching for on GME. It's a beautiful, beautiful day to be alive, guys, because this ticker symbol update is a crazy one. You have seen this thesis play out to a T. IWM looks great. GME looks great, even in the midst of all the uncertainty from war. You've seen GameStop outperform the broader market, and you are expecting in my opinion, a good earnings report. So that is your technical update on GME. I will link a timestamp for the AMC fellows who want to chip along, but we're not going to start AMC. Stick along because we are one community. But AMC's short interest currently at 23% or 122 million shares. But before all of that, guys, I wanted to cover something that I thought was genuinely very important in fighting for free and transparent markets, and that is failed to delivers. Shout out to Reese, my boy, saying AMC Entertainment sees elevated fails to deliver for the first time since April, May of 2024. And this outlines just how dramatically the failure to the delivers have escalated on the stock. Now, when you see this crazy, crazy pump in failure delivers hitting almost 2 million or a little bit above that, I wanted to look into Grok because I'm genuinely curious to see an unbiased perspective, right? I think that's very important. And you see typical effects and scenarios of failure to delivers and short interest being high. Of course, you're going to see downward price pressure and suppression, most common baseline outcome. But the second thing is, and if you can get more attention on this topic, right? If you can share this and get this out there, increased potential volatility for a short squeeze, higher risk, high reward flip upside, extremely high short interest, 20 to 30% of the float or 10 plus days to cover, already rises short squeeze risk. Short sellers must essentially buy the stocks to cover, and any positive catalyst, good earnings, news, retail buying can force rapid covering or upward spiral in price. Forced buy-ins barring constraints, higher volatility. Now, this is what you expect when you talk about these short squeeze opportunities. And when you look at AMC, that paired along with the RSI being at 52-week lows, along with price being at that 52-week low, I think creates a freaking story of manipulation and unfair, or maybe a little bit more of aggressive short selling that is going on AMC. It is meant to be aggressive. It is meant to be maybe a little unfair, right? And that's not financial advice, but that's what these statistics are outlining. And when you look at the RSI being at 23, you've not been this low since 2020 of April, right? Sitting at $10. You're now at $1.12. And these all of these signs, right? Considering you're making a pretty nice base at these lower levels. You saw a nice candle close last week of an inverted hammer candle, which is a bullish candlestick pattern, and you now saw a daily bullish hammer candle and closed and wicked off of your all-time low of 108, right? And so what I'm watching here is I'm watching the long-term macro begin to curl up. I want to see this begin to stagnate here, and for this weekly MACD to curl up. If that happens and you get a green MACD cross, guys, that would be your first MACD cross and true follow through since May of 2025. We all know what happened, right? You saw a pretty nice rally of about 60%, 61% to be exact, and that would, in my opinion, send shorts in capitulation at these levels, at this current failure to deliver rate, and at this current short interest on the stock of 23%. It being a beach ball held under, in my opinion, gives it way to even rally, right? And this sounds crazy, but 100% away is that 242 level, which then gives you a nice V-shaped recovery and hopefully a bottom on this play, guys. So that's what I'm watching for AMC, is a lot of the stars are aligning and your volume trend is genuinely down, right? You look at the volume just completely exit the chat, and it really gets me hoping that you can see a beautiful close, right? Bullish hammer candle, maybe even a hammer candle this week, and then follow through, right? You need the volume from the bulls and the fundamental thesis or the news to come through and push you forward. But until then, guys, you continue to chop sideways within this falling wedge. I'll let you soak that in. That is a very, very long-term falling wedge. And the profit target of that falling wedge, right? You take the length of the wedge, stick that on top of wherever you break out, right? It could be down here. It could be down here. Let's just say we break out sometime October, May, June. I don't know. Let's be conservative here. Let's say July of 2026, right around my birthday. That takes you upwards of $45. Now, what is the breakout point? The breakout point on this falling wedge, now I can definitely fact check this because this is logarithmic and it doesn't always play out on logarithmic, but this says 142, 150. Now, that would be significant if this falling wedge were to actually be the case, right? If this were to occur, you're talking a rally up to $40 on AMC. And that is the kind of short squeeze thesis that I think can revitalize this community and get retail traders winning again. So I hope you guys all found this interesting. I hope you guys all found this enjoyable. God bless each and every single one of your families. And remember, guys, the best is yet to come. Subscribe, like, share, and I will see you in the next video. Let's go. Whoops.